Very good morning, my dear friends. First of all, happy Teachers' Day to one and all. So, in the last lecture, we completed up to the chapter Amalgamation. Am I right? This is the time for internal reconstruction. First, I'll give a good intro for internal reconstruction. As you know, we already discussed something related to internal reconstruction in the chapter Reconstruction, where my entire discussion was discussed with respect to both internal reconstruction as well as external reconstruction in the chapter Amalgamation itself. But anyway, as a formal introduction, for the purpose of visualizing the deeper issues, let me take up intro part. And one more thing, guys, I tried to upload the notes part which related to amalgamation in the PDF corner, but I think so there are certain technical glitches are there. I'll coordinate with the technical person, then such PDFs may be visible to you. Okay, fine. Come to this chapter, internal reconstruction. So first of all, you know, when a company want to go for internal reconstruction, that thing already aware, that is when a company who's suffering losses from the longer period and their existing financial statements are not depicting true and fair picture, then such company may go for internal reconstruction. That means, simply speaking, when the financial statements are not depicting true and fair picture, then such companies will go for internal reconstruction. You know, we actually considered one company that is so-called as Rani Limited. Am I right? At that point of time, if you really remember the intro part of amalgamation, we took one example, which is Rani Limited. So in that company, a huge P&L account debit balance is there. Apart from that, certain unrepresented assets, or you can call it as intangible assets, something like that will be there. Then certain fictitious assets are also available. So due to which the existing financial statements of Rani Limited is not depicting true and fair picture, then Rani Limited decided to go for internal reconstruction. And one more thing, guys, in case of internal reconstruction, what really happens here? And the entire process of internal reconstruction or the accounting treatment with related to internal reconstruction, which provisions will decide, sir? Is there any accounting standard is available, sir, as like amalgamation? No, the entire process of internal reconstruction is completely depending upon the provisions of Companies Act 2013. That is depending upon type of internal reconstruction they selected. Just a second. So sorry. So provisions of Companies Act 2013 will decide the type of accounting treatment we need to follow or the procedure for internal reconstruction we need to adopt. So to talk technically or to talk legally, how the internal reconstruction process is going to happen, sir, in any company, how the typical internal reconstruction process is going to happen. First, let me explain. All of you, please concentrate here. So, and one more thing just I want to tell here. Sir, you are telling theoretically all these issues. That's good. We are able to understand as well. Is it really internal reconstruction happened in the outside environment as well? I mean, is there any companies for which internal reconstruction is going to occur? Compared with external reconstruction, the internal reconstruction practicality is much more lower. I mean, most of the times entities are willing to go for external reconstruction itself, because in case of internal reconstruction, lot of formalities they need to close. We are checking all such formalities in today's session. Then you can easily able to understand why in generally companies are not willing to go for the internal reconstruction. That too, one more disadvantage in case of internal reconstruction is, already, if the court decides to put unreduced after completion of internal reconstruction, they need to put unreduced while preparing the financial statements, especially while representing the balance sheet, which is not at all a good sign for a company who want to continue their business activities for a longer period, because everyone can be easily identify that the company is a loss-making company, and that too previously certain internal reconstruction procedure was adopted in the company internally. That is the reason why in general people are not willing to go for the internal reconstruction. So the practical applicability is much more lower. In fact, to be frankly speaking, I also didn't see any company which adopted the internal reconstruction in the past 15 to 30 years. Okay, fine. Apart from all such issues, we are in the discussion, we are in the learning aspect of the internal reconstruction. So that's why, which is part of the curriculum as well. So that's why we need to learn. Fine. Anyway, come down. Sir, the option available to the company when a company is suffering huge losses since long term is liquidation in general. Sir, everyone will be establishing the business activities to earn profits only, obviously. If that doesn't work out, if the continuous losses is coming day by day, then what they can do? The option available is liquidation only in generally. But before directly going into the liquidation, let us try the process of internal reconstruction. If it will works, the company may turn up into the profits, or then the company financial structure will be well built in the future, due to which maybe the company is going to enter into the profits in near future, maybe. That means, sir, what you are trying to tell here, sir, before going to the process of liquidation, another option available to the company is internal reconstruction. No doubt about it. This is oh my God, what is happening here? Just a moment. Yes. So before going to the process of this liquidation, the another option available to the company is internal reconstruction. Sir, that means the chapters external reconstruction, internal reconstruction, and liquidation. Why these three chapters are arranged in this order, The objective of internal reconstruction is to show the financial statements a true and fair picture. Not only that, the existing losses might be entirely vanished during the process of internal reconstruction. Then the company without liquidation itself, the company may survive. Then before going to the process of liquidation, we are going to adopt the internal reconstruction. Maybe that is the one reason actually they are put in such order. Do you understand what I am telling? Okay, just leave all such issues. Now coming to the legal issues. Okay, sir, when a company is decided to go for internal reconstruction, what are the different legal implications coming into the picture, sir? Then the board of directors will conduct a board meeting first. They will conduct a board meeting. In board meeting, what they will decide? They will decide to go for internal reconstruction. Sir, such thing not happen on a single day. Just they discussed on a hourly basis and they decided to go for internal reconstruction. It doesn't happen like that, because the companies are joint stock companies, huge turnover, huge worth of assets. different parties may impact due to this process of internal reconstruction. That's why the deeper discussions are going to happen after conclusion of the number of board meetings. They might take this decision. They are go for internal reconstruction. Then the same issue is put under in front of the shareholders by conducting a general meeting or by conducting a shareholders meeting, whatever the case may be. A general meeting means that is generally happening on yearly basis. Any other meeting, that is, you can call it as extraordinary general meeting simply. Okay, then the discussion is now in the hands of the shareholders. The shareholders is also approved for that, or if they provided any suggestions, or if they suggested any modifications, then such things are also they are taken into consideration. Guys, not only shareholders, the company is also going to conduct meeting with different creditors, or I can call it as different loan parties, because the process of internal reconstruction is going to impact each and every party of the company. That's why they are going to conduct meetings with creditors as well. Next, bankers as well. So like this, the company is going to conduct all such different meetings with the various parties who are going to impacted for this process of internal reconstruction. The shareholders, equity shareholders are the preference shareholders. Sir, why these persons are going to impacted? I'll tell you, just give for some time. Okay. Now, after completion of all such meetings, they might entering into such particular agreements with the various parties. Not only this, after completion of all such agreements and meetings, now the company send the proposal of internal reconstruction. Proposal of internal reconstruction means who are all the different parties going to be impacted, how we are going to settle all such different parties. We are going to clearly establish in such proposal. We are sending such proposal of internal reconstruction to NCLT, National Company Law Tribunal. You know NCLT, you might aware about the NCLT. If you don't know about anything about NCLT, as per the company law, certain regulators are available to administer the provisions of the Companies Act. Certain regulators were there. One of such regulator is ROC, Register of Companies, and another regulator is RD, Regional Directors, known as RD, Regional Directors. Yes, and another regulator as per the Companies Act 2013 is NCLT, National Company Law Tribunal, and one more regulator is NCLT, National Company Law Appellate Tribunal. Actually, this is not my subject, but still I am telling out of my anxiety. Okay. Next, you can take another regulator, she's SEBI. In generally ROC coming into the picture in which aspects, that is for sending your financial statements. Okay. At the time of registration of the company or at the time of liquidation of the company, what are all the formal discussions we need to make with the ROCs only. Regional directors means entire India was divided into 5 regions for the purpose of administering the things in the better manner. Now, these regional directors are overseeing the functions of the ROC, because in generally each and every state having ROCs and ROC branch offices. All such branches are ultimately overseen by regional directors. Approximately 5, I think so. 5 regional directors are available. Now, what about this NCLT and NCLAT? These are like courts. For example, statewide high courts are there, central-wide Supreme Court is there in India. to discharge the various legal activities. So, in the same way, related to company law issues, if any disputes are arised or if any permissions need to take considered, then we should not directly approach the High Court or Supreme Court. We may approach the National Company Law Tribunal and National Company Law Appellate Tribunal, depending upon the seriousness of that particular issue. So then what about this SEBI, sir? You know, SEBI is nothing but Securities Exchange Board of India, the full form. So which is the regulator in case of a listed companies. Listed companies. Because in case of listed companies, whose their securities are listed in the stock exchanges, that's a lot of public money is involved. And there is a high risk to incur certain frauds internally in the company. That's why the provisions are much more stringent in case of the listed entities. So along with the provisions of the company law, such entity should also need to follow the SEBI provisions. So that's why another regulator in apart from the company law is SEBI. We can also tell that issue as well. Okay, leave it all such things. Come back. Okay. So now the proposal of internal reconstruction we sent it to National Company Law Tribunal. Then after visualizing the things in the best possible manner, whether that proposal is available or not, NCLT will check. Is it justifiable to the each and every party of the company or not? It will check. Then NCLT will pass an order. NCLT will pass an order to go for the process of internal reconstruction. Then as per that particular order, company will start doing internal reconstruction procedure. Yeah. Then company will start doing internal reconstruction procedure. As per the order passed by the National Company Law Tribunal. Then concentrate. Sir, after implementing the process of this internal reconstruction, actually our entire discussion will be here, guys. All of you, please concentrate. Our entire discussion will be here. Sir, how we are going for internal reconstruction and what are the different procedures we are going to make. Here, our entire discussion will start the internal reconstruction procedure. Our entire accounting treatment is completely depending upon this procedure. Okay, we will see at later point of time what is that procedure, how it going to appear, how it going to occur. Okay, so after completion of internal reconstruction procedure, such company will go for preparation of financial statements. Preparation of financial statements. You know, now at the time of preparation of financial statements, if NCLT orders to add and reduced word and reduced, then such company here, Rani Limited, should need to add and reduced at the time of preparation of balance sheet. And one more thing also, the court may order or without order of the court as well, as per the provisions of internal reconstruction. The company should clearly mention for what are all the different property, plant and equipment was impacted during the process of internal reconstruction. Sir, why property, plant and equipment is in generally impacted during the process of internal reconstruction, sir? So you may understand all such issues when I start explaining the procedure of internal reconstruction. Sir, from the starting onwards, you are telling about provisions of Companies Act 2013 is applicable. The entire provisions will decide depending upon the Companies Act. There are certain lot of different procedures are happened in case of internal reconstruction. Different parties may going to impact in the process of internal reconstruction. What such procedure is all about, sir? What such procedure is all about, which is nothing but procedure of internal reconstruction, or you can call it as internal reconstruction, different types. Sir, how in different mode the internal reconstruction is going to happen, sir? Okay, concentrate, guys. Fine. Today, what happened to my OneNote here? There are certain issues. Yeah, fine. So you can call it as procedure in case of internal reconstruction or different types of internal reconstruction as well. Sir, it may look like theory for 10 to 15 minutes. Once you understand the process of internal reconstruction, what really happening, then you can enjoy my session. So please be patient up to that time. In case of internal reconstruction, alteration of share capital may be happen. Alteration of share capital. Apart from alteration of share capital, variation of shareholders' rights will also occur. A reduction of share capital will happen. Compromise and arrangement. Sir, all are completely new words to us, sir. Okay, these are actually coming in Companies Act 2013 in your CA final level. Okay, you are might not aware these provisions of Companies Act 2013 because this is not form part of your CA inter syllabus. Okay, you might aware in CA final, no doubt about it. And finally, through surrender of shares concept also, a company can go for internal reconstruction. And before explaining such all things, in the layman way, in case of internal reconstruction, what really going to happening, sir? What really going to occur, sir? Once the company, that is board of directors, decided to go for internal reconstruction, I told you the company, what they will do, sir? The company will do revaluation of assets and reassessment of liabilities. Company can go for revaluation of assets as well as reassessment of liabilities. Sir, due to which what happened, whenever a company go for revaluation of assets, if the company in the outside market, the company's assets in the outside market is quoted at much more price, then upward revaluation is going to happen. In the outside market, that particular asset value is lower while compared with the book value, then downward revaluation is going to occur. But one thing is sure, now the assets book values after revaluations are at par with the market value, then the financial statements is showing true and fair view. That is our objective. That's why a company can go for revaluation of assets. And apart from that, reassessment of liabilities. Sir, reassessment of liabilities means you can also call it as revaluation of liability. The particular liability we are going to reassess. At the time of reassessment of liabilities, we are also make negotiations with different liability holders. Different liability holders means, for example, we are having a bank loan. Let us assume we are having a loan in ICICI. We are having a loan in ICICI. How much, sir? Let us assume 2 crore loan. Now, so the company situation is not in good mode. The company is a loss-making company. Huge losses are exist in the debit side. I mean, P&L account debit balance under the assets of the balance sheet. That's why you can make it negotiate for 1.5 crore. So then why the bank is ready to agree, sir, your figure? Because if the company is going for liquidation, even the banker will not get this 2 crores as well. Even he doesn't get this 1.5 crore at all. Now at least in the process of internal reconstruction, we are telling that, okay, sir, we are ready to make a full and final settlement of 1.5 crore. Or just we are going to settle within 1 year for that 1.5 crore. You can sacrifice the remaining amount of 0.5 crore, which is known as reassessment of liability as well. Do you understand? So apart from revaluation of assets and reassessment of liabilities, in the process of internal reconstruction, also we are also making certain negotiations with our shareholders. Yes, shareholders means both equity shareholders and preference shareholders as well. For equity shareholders, we may ask for to sacrifice something out of their share capital. For preference shareholders also, we may ask to sacrifice something. Sir, due to making sacrifices either through shareholders or either through liability holders, we are getting certain profits, right? Such all profits, what we derived from the process of internal reconstruction is ultimately used to set off the debit balance of P&L account and to set off the unrepresented assets and to set off the fictitious assets. Do you understand what I am telling? The profit which you derived during the process of internal reconstruction is ultimately used to set off the P&L account debit balance, to set off the unrepresented asset, to set off the fictitious assets. Still, if any balance is there, we are getting huge profits now. Still, if any balance is there, such profit in generally term it as a capital profit, we can transfer to the capital reserve. That is the ultimate theme or the background behind the process of internal reconstruction. Now, such process of internal reconstruction is going to occur in these 5 different ways. As per your syllabus, there are certain other ways are also possible. Okay. So then, out of which the first and foremost mode was alteration of share capital. Alteration of share capital actually discussed which section of Companies Act 2013, sir? Section 61, if I'm not wrong. In case of variation of shareholders, section 48 is going to discuss. A reduction of share capital, section 66 of Companies Act 2013 will discuss. Compromise and arrangement, I think so, 260 to 270. And related to surrender of shares, there is no provision in the Companies Act 2013. There is no provision with respect to the Companies Act 2013. Okay. Sir, now coming to the alteration of share capital. What is the meaning of alteration of share capital? First, you can tell me, you can tell that thing, sir. Alteration of share capital means alteration in authorized share capital. Yes, is also coming under alteration of share capital. Authorized share capital. Sir, we are not changing anything with respect to the paid up capital. Till now, let us assume the authorized equity share capital was 10 crore and the authorized preference share capital was 5 crore. So the total authorized capital was 15 crore. Now we are going to increase this 15 crore to 20 crores by adding equity shares for 3 crore, by adding preference shares for 2 crore. So total, it is going to increase to it will be going to increase by 5 crore. The total will be the 20 crores. Now, increase in authorized share capital is coming to the form part of alteration of share capital only. Sir, there is a conversion, sir. What is that conversion? Or before seeing the conversion, there is a subdivision, sir. Subdivision or consolidation of shares. Sir, is it Companies Act 2013 is accepting for subdivision or consolidation of shares? Yes, as per section 61, it is possible. And one more thing, to apply the provisions of section 61, first of all, in the company articles of association, AOA will be there na, articles of association. A provision should be exist, not only in the Companies Act 2013, that articles of association should accept all such acts. That's why at the time of establishing a company itself, in the articles of association, all such provisions were in generally inserted. Sir, if it was not inserted previously, then what I should need to do for? You should need to alter the articles of association and insert such provisions, then you can go for alteration of share capital. Do you understand what I'm telling? Not only this, guys, this alteration of share capital is going to impact the shareholders' rights as well. So that's why, along with articles of association permission, we should also need to conduct a meeting. In that meeting, at least 50% of the shareholders should agree for this alteration, which is nothing but they should need to pass the general resolution. Yes. Along with articles of association, general resolution should be required for all the types of alteration of share capital. Sir, in case of subdivision or consolidation of shares, what really going to occur, sir? Let us assume total number of equity shares were 10 lakh and each and every equity share is 100 rupees. Then may I know the total equity share capital? May I know the total equity share capital then? That is 10 crores. 10 crores will be the total amount of share capital. Am I right, guys? Fine. Now we are going to subdivide each and every equity share into 10 rupees. Then may I know how many number of equity shares coming into the picture? The number of equity shares were then 100 lakhs at the rate of 10 rupees each. The total amount will be the 10 crore only. So that means due to subdivision, the impact is there is a change in number of equity shares. There is a change in face value, but there is no change in paid up value. No change in paid up value. Sir, why in the process of internal reconstruction, a company can go for subdivision or consolidation of shares, sir? Maybe we are during the process of internal reconstruction, we need to make settlement to various parties. We need to make settlement to the various parties. Maybe the bank loan now we are going to settle, or maybe we want to increase the number of shares. Okay. Or maybe we want to decrease the number of shares. At that point of time, the company can go for consolidation. So all such activities are going to occur. That's why a company can go for either subdivision or consolidation of shares. Sir, at the time of subdivision or consolidation of the shares, what is the journal entry we are going to pass? Equity share capital account data 10 crore. In bracket face value, 100 rupees face value is going to cancel. To equity share capital account, 10 rupees face value we are going to introduce. Being 10 lakh number of equity shares are going to subdivide into 100 lakh number of equity shares at the rate of 10 rupees each. That is the narration. That means there is no change in the paid up value and there is no change in the entry as well. There is only change in the face value and number of equity shares. That thing you can represent through your narration. Nothing is great here. Hope you understand both subdivision and consolidation. So apart from authorized share capital, that is alteration in authorized share capital and subdivision and consolidation of shares, conversion is also coming to the picture in case of alteration of share capital. What is the meaning of conversion, sir? That is conversion of shares into stock and vice versa. Vice versa means either stock into share as well. What is the meaning of stock, guys? You might aware this word of stock in your Companies Act 2013. You know, a share is nothing but a smallest denomination in the share capital. Do we agree, all of you? Smallest denomination in the share capital is nothing but share. Shares are always having certain face values. They can be expressed in terms of particular denomination. But coming to the stock doesn't have any number. Stock doesn't have any particular denomination as well. I mean, sir, is it 3.5 lakh stock is available? Yes. Sir, is it 1.2 lakh stock is available? Yes. We can't express it in any particular denomination. It has certain worth. That's it. In case of internal reconstruction, in generally, why people can go for conversion of share into stock? Maybe we may not express the shares in the particular denomination. For example, if I required exactly 2,57,537 worth of shares, that is not possible. Because if each and every share we are going to express in terms of 100, how for the remaining change we can put it into different shares. So that's why if you are just going to convert into the stock, we can give the part of the amount also to any particular party. And one more thing, guys, there is no change in rights with respect to the shareholder and stockholder. Sir, can a stockholder can be participate into the general meetings? Yes, absolutely. Sir, can a stockholder will get the dividend as like shareholder? Absolutely. Sir, can a stockholder will have a voting rights? Yes, as like shareholders only. There is no difference in between shareholder and stockholder. The only difference was shareholders, their denomination, their amount will be in particular denomination. For stockholder, it will not be in denomination. But if fully paid up share only, we can convert into the stock. A fully paid up share. That means, for example, 10 rupees is the face value. If you already collected 10 rupees from that particular shareholder, then only you can convert such particular share into the stock. Do you understand? Okay, that means a partly paid up share we cannot be converted into stock. So such minimal differences are such certain important issues are there in between share and stock. Sir, but coming into the accounting treatment, what is the general entry we need to provide here, sir? Simply debit the equity share capital if you are going to convert share into the stock, and credit the stock account. That's it. Vice versa, if you are going to convert stock to the share, then equity stock account data to equity share capital account. That's it. So then where such stock we need to represent in the balance sheet, sir, at the time of preparation of balance sheet, it is also form part of share capital only. Do you understand? Fine. This is all about alteration of share capital. Fine. Sir, is it alteration of share capital is altogether different from reduction of share capital? Absolutely. That is the reason why for reduction of share capital, a separate line item given here. Alteration of share capital means there is no reduction in share capital. Just there may be a change in authorized share capital. There may be change in subdivision or consolidation of shares. Certain shares, they might be converted into the stock or stock into the shares. But where the real reduction happened, is there any reduction in the paid up value in anywhere? No. That's why reduction of share capital is altogether different concept we are going to see in the next phase. Till now, I didn't see anything in the query box. Let me check, guys. Guys, are you completely involved in my lecture actually? Nobody is providing any query here. Subdivision is like splitting of shares only. You are correct. Stock is bundle of shares. You are right. Not only bundle, it can be in any denomination. There is no particular denomination. Fine. Hope you all are with me. Let me continue my discussion. Next, coming to variation of shareholders' rights. So the next issue under the internal reconstruction process is variation of shareholders' rights. Sir, variation of shareholders' right means? Variation of shareholders' right means, in generally, in any company, shareholders having two different types of rights, right? May I know what are such two different types of rights? All of you, please put your answers in query box. May I know what are such two different rights? One right is with respect to voting. One right is with respect to voting. And another right is with respect to dividend. Yes. One is with respect to voting and another one is with respect to dividend. Variation of shareholder right means there may be variation in voting. There may be variation in dividend. Can I convert preference shares into equity shares? Because preference shareholders getting different voting rights, equity shareholders are getting different voting right. Equity shareholders can have a right to participate in each and every meeting, but preference shareholders can only participate in the meeting in which their rights are going to impact. Do you understand? Then now, can I convert the preference shares into the equity shares during the process of internal reconstruction? No, it is not possible. But if the preference shares are convertible preference shares, If the preference shares are convertible preference shares, then we can convert into equity shareholders or equity shares. That is different story. Or maybe during the process of internal reconstruction, preference shareholders are agreed to lose their some rights. Okay, sir, we are ready to sacrifice that portion, provided that you should need to convert into equity shares. Then only we will lose, sir. At that point of time, also they can go for conversion of preference shares into equity shares, which is known as variation of shareholders' rights, but which is not termed as uh, alteration of share capital. The reason is, in case of alteration of share capital, the shareholder right doesn't impact. You can check subdivision or consolidation, or you can check alteration of authorized capital. You can check conversion of shares into the stock. There is no change in the shareholder's right. Shareholder right is same with respect to the dividend and with respect to the voting. But here, there is a change in their rights. Next, one more thing, guys. With respect to dividend, how they are going to change, sir? Maybe with respect to dividend, I can tell you, please concentrate. For example, in equity shares, different class of equity shares are possible. Class A, class B. Do you aware this? I think so. There is one chapter called uh, differential different variation in rights or differential rights, something in our group 2 syllabus itself, I think so. Buyback of equity shares and differential shares, something like that. Some chapter is there. Equity shares with differential rights, correct. The correct word is equity shares with differential You're suddenly from my side. Yeah, hope my voice is audible and the picture is clearly visible. Can I proceed, sir? Yes. Yeah, fine, guys. Now we are discussing the part of variation of shareholders' rights. So there is variation maybe with respect to voting right, or the variation maybe with respect to the dividend. I mean, in differential equity shares are also possible. Class A equity shares are going to convert into Class B equity shares. Maybe Class A equity shareholders are getting at the rate of 10% dividend. Whenever we are issue, the Class B shareholders are getting less than 50% to Class A shareholders. That is the Class B shareholders right. Let us assume. Now there are two different classes of shareholders are exist. The Class B shareholders nature was whenever you are issuing dividend to Class A shareholders, Class B shareholders are getting 50% less than Class A shareholders. Then, for example, if you declare 10% dividend, 10% dividend to Class A shareholders, then automatically Class B shareholders getting 5% dividend. Do you understand? Now, if we are going to convert the Class A shareholders into the Class B shareholders, which is known as variation of shareholders right only, are the most aware fact. If I tell you, sir, if I convert cumulative preference shares into non-cumulative preference shares, which is also variation of shareholders right only. Sir, if I convert participated preference share to non-participated preference shares, which is also variation of shareholders right only. If I convert cumulative preference shares to non-cumulative preference shares, which is also variation of shareholders rights only. So now we understand what really the meaning of variation of shareholders right. But whenever there is a variation of shareholders right with respect to the accounting treatment, which modification we need to provide, sir, or which journal entry we need to provide, sir. It's pretty much simple. That is, for example, it is cumulative preference shares to non-cumulative preference shares. Then the entry cumulative preference share capital account debtor to non-cumulative preference share capital. So for accounting treatment wise, there is no much burden on your minds. Simply you should need to cancel the old share capital. You should need to credit the new share capital. That's it. With respect to the accounting treatment, no need to discuss much as well. But what really the meaning of variation of shareholders right means, the right, there is a change in right either with respect to voting or with respect to dividend. Okay. Next, this is all with respect to section 48, variation of shareholders right. So now coming to reduction of share capital, which is section 66, all of you, which is section 66 of Companies Act 2013, reduction of share capital. So reduction of share capital may occur in three different ways. Consider it, guys. Reduction of share capital may going to occur in three different ways. One is through cancellation of uncalled capital. You can call it as cancellation of uncalled capital. Okay, not an issue. And another one is payment of paid up capital. And another one is sacrifice made by shareholders. Consider it, guys. One by one, I'm going to discuss through different examples. One is cancellation of uncalled capital. What this is all about, sir. Let us assume we have 1 lakh equity shares and the face value is 10 rupees per each. But the paid up value till now was, the paid up value was only 7 rupees, which are partly paid up shares. Now the uncalled capital out of the face value of 10 rupees was 3 rupees, which is uncalled capital. Now we are going to cancel such uncalled capital. Now we are going to cancel such uncalled capital, which is known as a reduction of share capital only. Sir, why, sir? Really, now the total paid up value is 7 lakhs only, right? Now, even though if you cancel, there is no change in the paid up value, na? But you should need to understand one thing here. Maybe the current paid up value doesn't going to impact, but in future, the company is losing one right to get money from the shareholders. Do you understand? Which is especially reduction of share capital only. That means the future capital is going to impact right now due to taking the decision of reduction of uncalled capital, or the through decision of cancellation of uncalled capital, which is also form part of reduction of share capital only. So then what is the journal entry we need to provide here, sir? Equity share capital account data, consider all of you. The amount will be 7 lakhs only, but the earlier face value was 10 rupees. To equity share capital account. Right now also the total paid up value 1 lakh into 7 rupees, which are 7 lakhs, but the paid up value was 7 rupees. The paid up value was 7 rupees. The cancellation of uncalled capital, you can also treat it as the cancellation of uncalled capital. We can also call it as conversion of partly paid up shares into fully paid up shares, which is also known as conversion of partly paid up shares into fully paid up shares. Do you agree, all of you? What happened here? Earlier, out of 10 rupees face value, 7 rupees was paid up. Now, out of 7 rupees face value, 7 rupees was paid up. Now, which is known as conversion of partly paid up shares into fully paid up shares. Earlier, the share was partly paid up. Right now, the share is fully paid up. So, conversion of partly paid up shares into fully paid up through cancellation of uncalled capital is a classic example for reduction of share capital. This is the entry you need to pass. So, then what about payment of the paid up capital? Let me take the same example. 1 lakh equity shares are there. Just a second. 1 lakh equity shares are there. Face value is again 10 rupees, and the paid up value also just you can consider it as a 10 rupees for the time being. Am I right, guys? Now, out of this 10 rupees paid up value, now we are going to repay 3 rupees per share to each and every equity shareholder, which is nothing but payment of paid up capital. Now, again, the entry is equity share capital account data. First, you should need to cancel 1 lakh into 10, which is 10 lakhs. The face value is 10 rupees per share. To equity shareholders account. To equity shareholders account, how much I need to repay? 1 lakh into 3 rupees, which is 3 lakhs. To equity share capital account, in bracket face value was 7 rupees, which is 7 lakhs. Now you can make repayment to the equity shareholders by passing the entry equity shareholders account data to bank account, which is 3 lakhs, 3 lakhs. So now what is the difference between cancellation of uncalled capital and payment of paid up capital, sir? In case of payment of paid up capital also, there is a change in paid up value. Sorry, there is a change in face value from 10 rupees to 7 rupees. Earlier also there is change in face value from 10 rupees to 7 rupees. But the difference is, in case of cancellation of uncalled capital, even single rupee we are not paying to the existing equity shareholders. But in case of payment of paid up capital, we are paying certain portion to the existing equity shareholders. That is nothing but equity shareholders to bank account. Do you understand what I am telling here, all of you? So, which is a normal course in generally happen, payment of paid up capital, which is also form part of reduction of share capital. Next, coming to sacrifice made by the shareholders, which is the last portion. All of you come to this point. Sacrifice made by the shareholders. Sir, what this is all about, sir? What is this sacrifice made by the shareholders? Shareholders may sacrifice in two different ways, guys. One, we can call it as just a moment, reduction in paid up value, but not in face value. And another one is reduction in paid up value as well as face value. Please consider it, guys. This portion is important because this portion is regularly coming into the examination. Most of the examination problems are also covered. Most of the examination problems, this adjustment is also covered. What is this all about, sir? Sir, first of all, what is the sacrifice made by the shareholders? First, let me take one example, or let me continue the same example which I took previously. Existing 1 lakh equity shares are there. Face value again 10 rupees. And the paid up value is also 10 rupees. Now, let me apply the case to the first type of sacrifice. There is a reduction in paid up value, but not in face value. Now, shareholders are ready to sacrifice 3 rupees per share out of 10 rupees. Out of 10 rupees, shareholder is ready to sacrifice to the extent of 3 rupees. But still shareholders are agreed that we are continue the face value at 10 rupees only. Then what is the entry, sir? Then what is the entry? The entry is equity share capital account debtor. Consider all of you. Sir, 3 rupees they are ready to sacrifice means 3 rupees I need to cancel. That is 3 multiplied with 1 lakh, which is 3 lakh. 2. Sir, due to making sacrifice, or shareholders are ready to forego something, which is 3 rupees, due to which during the process of internal reconstruction, we attained any profit or not? Tell me, guys. Yes, profit. Whatever the profit or whatever the loss, we are going to occur, or the amount going to occur during the process of internal reconstruction is ultimately transferred to one specific account, which is known as a reconstruction account, which is a temporary account, guys. If you want to put X account, yes, you can put. If you want to Y account, you can put. But we are in the process of reconstruction. That's why I put it as reconstruction account. Or maybe which was happened clearly due to the capital reduction, or you can put it as capital reduction account as well. Out of the 2 accounts, any account you can use. Tell me, guys, in the books of the selling company, whenever you are attained any profit or losses, you are transferred to realization. In the same way, whatever the profit or loss we derived during the process of internal reconstruction, we need to transfer to reconstruction or capital reduction account. Why? What is our ultimate objective? The profits what we are getting from the process of internal reconstruction is ultimately used to knock off with P&L debit balance, is ultimately used to knock off with unrepresented assets. We are ultimately using to knock off with fictitious assets. Anyway, it is a temporary account which is going to be knock off in future. Fine. Which is 3 lakhs. Sir, why you are not representing in the brackets face value, sir? Because there is no change in the face value. Face value was earlier 10 rupees, now also 10 rupees. What happens? Only there is a reduction in paid up value. Earlier, the paid up value was 10 rupees. After passing this entry, paid up value reduced to 7 rupees per share. That's why I'm not representing anything in brackets in the form of face values. That's why the entry was equity share capital account to capital reduction account or reconstruction account, which is 3 lakhs. That's it. So the same facts, if I considered in case number 2, I mean, there is a reduction in paid up value as well as face value. There is a reduction in paid up value as well as face value. Then how the accounting entry is going to change, sir? Consider all of you. Equity share capital account debtor. First, you need to cancel 10 rupees face value share. That's why 10 rupees you should need to make it debit. So the amount was 1 lakh into 10, which was 10 lakhs. To profit how much? 3 lakhs. Now the shareholders are ready to sacrifice 3 rupees to the extent of 3 rupees. That's why you can transfer to reconstruction account or capital reduction account for 3 lakhs to equity share capital account. Now, earlier the face value was 10 rupees, but now the face value is converted into 7 rupees, which was 7 lakhs. Sir, what is the difference between this journal entry and this journal entry, sir? How these two journal entries are different from each other? In case of this journal entry, we are not at all touching the face value. Just I am reducing the paid up value and transfer the profit to capital reduction account or reconstruction account. But in this journal entry, there is a reduction in paid up value as well as face value. There is impact in face value as well as paid up value. That's why I'm touching the face value first. I'm canceling the entire equity share capital, 10 lakhs. Then I am issuing the new equity share capital of face value of 7 rupees each. The difference is the profit I transfer to the reconstruction account. In the problems, unless otherwise specifically mentioned, we should always assume that whenever an equity shareholder or preference shareholder is ready to sacrifice something, we can assume that there is a reduction in paid up value as well as face value. This is the common assumption, guys. This is the common assumption in all our problems. Unless otherwise specifically mentioned that there is a reduction in paid up value, but not in face value. So in generally, we will assume that whenever a shareholder is ready to sacrifice something out of his paid up value, you can assume that there is a reduction in paid up value as well as face value. Do you understand, all of you? Do you agree with me, guys? Can I proceed? Do you understand, all of you, these 3 portions? That is cancellation of uncalled capital, and through payment of paid up capital, there is a reduction of share capital, and due to sacrifice made by the shareholders, that is reduction in paid up value but not in face value, reduction in paid up value as well as face value. Is it clear, guys? Fine. We are in the process of internal reconstruction, out of which alteration of share capital we discussed, variation of shareholders' rights we discussed, reduction of share capital just now I completed, out of which sacrifice made by the shareholders concept is important, and the common assumption also I told you, unless otherwise mentioned, we can simply assume that there is a reduction in paid up value as well as face value. Next, come to the concept of compromise and arrangement. All of you come below. Come down. Compromise and arrangement. Sir, what is the meaning of compromise and arrangement, sir? Compromise and arrangement is an agreement. It is an agreement. Yes, it is a binding agreement. It is a legal document entered between 2 parties. Who are such 2 parties, sir? Entered between 2 parties, out of which one party is no doubt about it, company. One party is company. Who are the other parties, sir? Other party is an outside party, outsider, or such an outsider may be lender, or the outsider may be creditor, or the outsider may be shareholder. So shareholder is also outsider for this concept. Only for understanding compromise and arrangement, I mean, there is other than a company. He is maybe a shareholder as well. Okay, any party. It is an agreement entered between company and the other than company. That is outsider of the company. For which purpose, sir? What is the purpose of this agreement? The outsider or the other party. The other party is ready to sacrifice. Is ready to sacrifice certain portion outstanding from the company. He should need to receive certain portion from the company which is outstanding. Out of the amount outstanding from the company, if the other party is ready to sacrifice certain portion, then such agreement is technically known as compromise and arrangement. Sir, there is a small difference between compromise and arrangement as well, you know. When we are in generally using the word compromise, maybe something certain dispute is going to occur in between company and the other party. For example, guys, who can I take? Trade payables are there. The outstanding amount for trade payables in my organization was 50 lakhs. Now, company, our board of directors decided that, sir, we can ready to pay only to the extent of 38 lakhs only. This is the company figure. For example, trade payables, not at all agree for that. No, sir, we required at least 45 lakhs. There is a dispute occurred in between trade payables and company. And finally, after completion of so many negotiations, and after conducting of so many meetings with the creditors, then creditors are ready to agree with 40 lakhs. So trade company point of view, 2 lakhs increased, and creditors point of view, 5 lakhs decreased. 40 lakhs will be the final figure. Now, while comparing 50 lakhs with 40 lakhs, there is a 10 lakhs of compromise is there. No, but how this 10 lakhs compromise was occurred after making so many negotiations, and initially there is a dispute occurred. Then after occurring of dispute, if something was sacrificed, then which is known as compromise. Then what is the meaning of arrangement? Arrangement means straight away they agreed. For example, 10% debentures are there. Worth was 5 lakhs. Now straight away agreed that such debenture holders are ready to sacrifice to the extent of 1 lakh. There are no arguments, nothing at all. Okay, they agreed, which is known as arrangement. But coming to accounting perspective, whether it is compromise or arrangement, it doesn't impact the accounting treatment, because initially dispute happened, after that they agreed, sir. They straight away agreed, sir. There is no impact in between there is no different impact in compromise and arrangement with respect to accounting treatment. That's why whether it is compromise or arrangement, there is no change in the accounting treatment. That is, I am clearing at this instant itself. But conceptually, there is a difference between compromise and arrangement. Compromise happened first after incurring of the dispute. Arrangement happened without happening of any dispute itself. So then what is the journal entry we need to pass in case of compromise or arrangement, sir? First, let me put in this case. For example, trade payable earlier 50 lakhs, right? Right now it was 40 lakhs, right? Now the entry trade payables we need to decrease to the extent of 10 lakhs. Sacrifice how much? 10 lakhs, which is profitable situation. That's why you can transfer to reconstruction account. Such a simple accounting treatment. Now, for example, in this case, 10% debentures are ready to sacrifice to the extent of 1 lakh. Then what is the journal entry, sir? 10% debentures account debtor 1 lakh to reconstruction account 1 lakh. Such a simple accounting treatment we can provide in case of compromise and arrangement. So that means in case of compromise and arrangement, we need to check only one thing: how much amount is sacrificed by the other party. That portion you can simply put under reconstruction account, and that liability portion also we need to reduce by making the debit. Still some more compromise and arrangement issues I need to discuss, but before that you can go for the break, guys. Please, all of you take the break for up to 8:20. Please relax for 10 minutes, then come back. Some more important issues of compromise and arrangement I'm going to discuss in this class itself. Then, without seeing the concept of surrender of shares, I am entering into the text. I will summarize the text, then we can see the problems. Then in surrender of shares concept, we are going to explain, not in the today session, in the tomorrow session, because which is altogether different concept. Okay, so you can go for the break, guys, all of you. Guys, welcome back. We are in the concept of compromise and arrangement, right? Now, let me take up this discussion further, guys. I'll give two more examples for better understanding of the concept of compromise and arrangement. And believe me, our entire problem covers, or 80% of the problem covers things related to compromise and arrangement only. There are very remote chances we are getting things related from alteration of share capital and variation of shareholders' rights. Somewhat you can see questions from reduction of share capital. I maybe 1 or 2 points they might cover the reduction of share capital. That is especially through reduction happened through sacrifice made by the shareholders. That too, and remaining all the points given in the question or remaining all the adjustments which are given in the question are from compromise and arrangement only. So that's why I want to take much more time to discuss or to elaborate the concept in deeper way. I'm going to take further. Concentrate. Let me continue the same example. That is, the existing debentures were 10% debentures and the worth was 5 lakhs. Now, in the adjustment, it is clearly given that out of the 5 lakh worth of debentures, 1 lakh amount was ready to sacrifice. And for the remaining amount of 4 lakhs, and for the remaining amount, just a second. For the remaining amount, company is going to issue equity shares. Now, what is the journal entry? Can you please put your journal entries in the chart box, all of you in the query box? The debenture holders are agreed to sacrifice to the extent of 1 lakh, provided that for the remaining amount, the company should need to issue in the form of equity shares. Then what will be the journal entry? All of you, let me know. That is 10% debentures account debtor. First, you need to cancel the entire amount of 5 lakhs. Because out of the 5 lakhs, 1 lakh is ready to sacrifice means it should need to transfer to reconstruction account or capital reduction account. That is 1 lakh. For the remaining 4 lakhs, debenture holders are ready to expect, debenture holders are expected to get equity shares. That's why the company should need to issue in the form of equity shares. That's why to equity share capital account, we need to cancel the remaining 4 lakh worth of debentures also, and we need to make it transfer to credit of the equity share capital. So the entry is debentures account debtor, reconstruction account debtor to equity share capital account. That's correct. Very few members are participating in today's session, guys. Please, all of you send your answers. Whenever I am asking a question, you should need to put your arrow in the query box. Fine. Next. So the next case, so many members gave the correct answers. Let me continue the next case. All of you, please concentrate. What about this concept? What about this case is? Again, 10% debentures are there. The worth is 5 lakhs. Now, the debenture holders ready to sacrifice. The debenture holders ready to sacrifice 1 lakh worth. This is sacrifice made by debenture holders. Provided, or when they are ready to sacrifice, when they are ready to sacrifice, if the company issued 60,000 worth of equity shares, not 60,000 amount, 60,000 worth of equity shares. One more time, I'm repeating, concentrate. The existing debentures amount was 5 lakhs. The debenture holders are ready to sacrifice to the extent of 1 lakh, provided if they will get 60,000 worth of equity shares. Sir, then what about 4 lakhs, sir? There is no question about 4 lakhs. 4 lakhs is still continue it as a 10% debentures only. I'm not asking about the 4 lakhs. Now, the entire discussion is only with respect to this 1 lakh. Sir, debenture holders is telling that, okay, sir, no need to pay this 1 lakh amount to us. But again, what they are telling, you need to pay this 60,000, sir. How it will be look like, Sir, I will ready to forego 1 lakh, provided if you pay 60,000. Then you can call it as a gross sacrifice, which is a gross sacrifice, which is the amount paid by the company, Therefore, net sacrifice is equal to gross sacrifice minus amount paid by the company, which is 1 lakh minus 60,000, which is 40,000. So to the extent of net sacrifice made by the debenture holders only, we should need to transfer to reconstruction account. Don't transfer the gross sacrifice amount to the reconstruction account. The reason is debenture holders ready to forego 1 lakh, provided that if they are getting 60,000 amount, 60,000 worth of equity shares from the company. So that's why we need to check only the net sacrifice, how much the real sacrifice. You can call it as either net sacrifice or the real sacrifice. So just these all are only for understanding purpose. Okay. Now what will be the journal entry, sir? Sir, there is no question about 4 lakhs, right? That's why I don't want to think anything about 4 lakhs. I only think about that 1 lakh. That is 10% debentures account data. Only 1 lakh you can reduce. What is the real sacrifice? Transfer to reconstruction. To reconstruction account. That is 40,000. What about remaining 60,000? We are issuing equity shares. That's why to equity share capital account. Sir, do you understand the difference between the previous case and the current case? In the previous case, the company is issuing the equity shares for the remaining portion of 4 lakhs. To sacrifice this 1 lakh, debenture holders not expecting anything. They are already told that we are ready to sacrifice 1 lakh, sir. As a result, or to sacrifice 1 lakh, they are not expecting anything. Just for the remaining 4 lakhs, they are expecting the equity shares. That is different story. But here, to sacrifice this 1 lakh, they are to provide 60,000 worth of equity shares, or then only they are ready to sacrifice. That means we need to check the net sacrifice amount here. That's why for the remaining 4 lakhs, there is no discussion at all. That's why out of the 1 lakh, to the extent of the real sacrifice, we transfer to the reconstruction. The remaining amount only we are issuing in the form of equity shares. In the question also, they are regularly giving both the type of points to confuse the students. Sir, when this concept is applicable, when the case number 1 concept is applicable, I mean, this case is applicable, we need to read the sentence given in the problem carefully. For the remaining portion, if they are issuing something, then no need to check the concept of gross sacrifice and net sacrifice. But to foregone something, if the other party is expecting something, then we need to check the net sacrifice concept. That's why whenever the other party is expecting something, then you need to check he is expecting for the remaining portion or he is expecting as a result of sacrifice made by them. You need to check. Do you understand? Whenever the other party is expecting something from the company, then we need to check the other party is expecting for which purpose? For the remaining portion of the outstanding amount, or for the purpose of making sacrifice made by him. For which purpose he is expecting? Sir, for the remaining portion, then the concept of gross sacrifice and net sacrifice coming into the picture. No, he is expecting something as a result of sacrifice made by him, then the concept of gross sacrifice and net sacrifice coming into the picture. Hope you understand, guys. That's it. Yes, this time also more members participated and they gave the correct answers as well. Okay, fine. So this is all about something related to compromise and arrangement. So you may see some more adjustments under the related to compromise and arrangement under the problems. I unable to put each and everything at this instant itself. While resolving the problems, some more things. Okay. Next, sir, before proceeding with my text or my material, let me introduce one more concept, or that is that concept also, which is related to revaluation of assets and the liabilities. This concept as well. This also regularly asking in the examination, that is adjustment related to revaluation of assets and liabilities, because during the process of internal reconstruction, apart from the different procedures what I discussed, that is alteration of share capital or reduction of share capital, or maybe change in or variation in shareholders' rights or compromise and arrangement, apart from all such things, revaluation of assets and liabilities is also possible, right? Fine, concentrate. Sir, if it is the revaluation is related to asset, we need to check whether it is upward revaluation or downward revaluation. Sir, if the revaluation is upward revaluation, then the entry, if the revaluation is an upward revaluation, then the entry is, tell me guys, due to the upward revaluation of asset, profit coming into the picture or loss coming into the picture? Profit. That's why entry is asset account debtor. To the extent of revaluation profit, now we need to transfer to reconstruction account, or you can also transfer to capital reduction account. Both the accounts are names are same. Sir, no, if it is a liability, sir, it is a liability. Sorry, not a liability. Sir, if it is a downward revaluation, I already wrote it is an asset, na? Sir, if it is a downward revaluation, the entry is reconstruction account debtor to asset account. Am I right, guys? All of you. In the same way, coming to the liability. What are the general entries, guys, with respect to the liability? If the liability is a upward revaluation, now you need to pay much more. That's why which is a loss to the company, guys. So the entry is reconstruction account debtor to liability account. Sir, if it is a downward revaluation, then the entry is you need to pay less while compared with the book value. That's why which is a profit situation. So liability account debtor to reconstruction account. Hope you know all such journal entries, which is the entries to be passed at the time of revaluation of assets and liabilities. The only difference is in the general course. General course means other than in the process of internal reconstruction. If you are going for the revaluation process, you may provide the profit or loss to the revaluation account. But we are in the process of internal reconstruction. On behalf of crediting or debiting the revaluation account, just we are crediting or debiting the reconstruction account. That is the only difference. So first time revaluation upward, second time revaluation downward, it doesn't occur in the process of internal reconstruction. Either upward or downward, that's it, right? So that's why no need to think about first time or second time like that, as like you think in the AS10 PPE. Is it okay, guys, all of you? Fine. Next. Come down. I'll end up my discussion with one more concept. What is that? Unrecorded liability concept. Either unrecorded liability or asset, whatever the case may be. This is also important. Regularly testing this type of adjustment also into the problems. So which is unrecorded liability or asset? Concentrate. Sir, what is this unrecorded liability or asset concept is all about, sir? Sir, for example, a company, if any unrecorded liability is there, let us assume, due to any reason, due to maybe the error, or due to maybe the overlook, or due to maybe the nature of that particular liability, due to maybe the nature of that particular liability, which was unrecorded, due to any reason, guys, which was unrecorded. Now, during the process of internal reconstruction, we are discharging such liability. Now, what will be the journal entry, sir? One more time, I'm explaining the case, which is an unrecorded liability, but during the process of internal reconstruction, we are discharging. Discharging means we are making payment to that particular unrecorded liability. What is the journal entry, sir? Let me take one example for better understanding. Sir, there is an unrecorded liability to the extent of 5 lakhs. Now, for such 5 lakh, during the process of internal reconstruction, we are paying entire amount of 5 lakh. We are paying entire amount of 5 lakhs. Now, first, what is the journal entry, sir? First, which is an unrecorded liability till now not recorded in your books of accounts? First, record it. Before settling such unrecorded liability, first record it. Sir, in generally, to record a liability, what is the journal entry? May I know? P&L adjustment account at R2 liability. In the normal course, if you are forgot to record any liability, if you want to record any liability in your books of accounts, then the entry is profit and loss adjustment account at R2 liability or P&L account at R2 liability. Something like that you may write. But we are in the process of internal reconstruction. Any profit or loss, we should need to record through reconstruction account only. That's why entry was reconstruction account at R2 unrecorded liability account. Am I right, guys? All of you? Reconstruction account at R2 unrecorded liability account. Amount how much? 5 lakhs. Now we are discharging this unrecorded liability 5 lakhs. By paying 5 lakhs amount means the entry, for example, you are discharging through payment of cash. You may discharge through issue of equity shares, or you may discharge through issue of debentures. Anything may happen. How you are discharging, that matters. Unrecorded liability account at 5 lakhs. For example, you are issuing equity shares. Let us assume then to equity share capital account 5 lakhs. Now here my point is unrecorded liability debit here, unrecorded liability credit here. That's why the net entry is reconstruction account at R2. Participate, guys, all of you. Net entry is reconstruction account at R2. Equity share capital account. That is 5 lakhs. Sir, that means no need to record and no need to discharge. You can pass a net entry, which is reconstruction account at R2 equity share capital. Whenever you are discharging an unrecorded liability, the net entry is reconstruction account at R2 equity share capital account. Do you agree? No need to record and discharge. You can directly pass this entry. Sir, you may ask one more question. Sir, here out of 5 lakhs, let us assume entire 5 lakhs was paid. But in generally, during the process of internal reconstructions, compromise and arrangements are going to occur, na, sir. For example, out of this 5 lakhs, entire 5 lakhs was sacrificed. Other party is clearly told that no need to pay any single rupee, sir. Sir, then what is the journal entry, sir? Then first record it. For recording, what is the entry? Same entry. Reconstruction to unrecorded liability. Now, the other party is sacrificing. Now, if the other party is sacrificing, the entry is unrecorded liability to reconstruction account. Sir, second case number 2, just I am telling. This is case number 1. Let me write. Case number 2. Entire 5 lakhs was sacrificed by the other party. Then if you want to record, you can record by passing the entry reconstruction. The entry is reconstruction account debtor to unrecorded liability. First to record that. After that, actually we need to pay 5 lakhs amount to such unrecorded liability. But the other party is clearly telling that no need to pay. That's why unrecorded liability you can cancel 5 lakhs. The profit you can make it transfer to reconstruction account. Now, if you check reconstruction debit, reconstruction credit, unrecorded liability credit, unrecorded liability debit. That means for an unrecorded liability, if the other party is ready to sacrifice, no entry is the answer. The answer will be no entry. Do you understand, guys? All of you? No entry. Okay. Let me put the case number 3. Sir, I can't explain more problems, but I can explain more cases. Okay, that's better. What case number 3 is all about, sir? Out of the unrecorded liability 5 lakhs, 3 lakhs paid in the form of equity shares. For the remaining 2 lakhs, they are ready to sacrifice. For an unrecorded liability of 5 lakhs, 3 lakhs they are issuing in the form of equity shares, 2 lakhs they are ready to sacrifice. What will be the journal entry, sir? Again, you can record not an issue. First, reconstruction to unrecorded liability, 5 lakh, 5 lakh. Now, out of this 5 lakh, 3 lakhs we are paying in the form of equity shares, that is unrecorded liability to equity share capital account, 3 lakhs. For the remaining 2 lakhs, which they are sacrificed, means I need to transfer to reconstruction account, which is 2 lakhs. Here, total 5 lakhs. Now, if you check here, unrecorded liability credit 5 lakh, unrecorded liability debit 5 lakh. Reconstruction account out of 5 lakh, debit 2 lakhs was credit. That one also cancelled. Here, 2 lakhs was cancelled. Here, this 2 lakhs was cancelled. That means remaining reconstruction was reconstruction account debtor 3 lakhs to equity share capital account 3 lakhs. Do you agree, guys? All of you, this one? Sir, from case 1, which is case 1, sorry. From case 1 to 3, what I can conclude, what I can conclude, the conclusion is pretty much simple. At the time of discharging an unrecorded liability, the journal entry is reconstruction account debtor to discharged amount. That may be a cash, that may be a equity share capital, that may be a preference share capital, or that may be a debentures. At the time of discharging the unrecorded liability, the entry is same. If you check in case number 1 entry, reconstruction to equity share capital, discharging with 5 lakhs. In case number 2, nothing was discharged, sacrificed. That's why no entry. In case number 3, we are discharging 3 lakh equity shares. For that, all 3 lakhs only reconstruction to equity share capital 3 lakhs. Do you understand, guys? All of you. So, for example, on this 5 lakhs, we are paying 6 lakhs. Then also the entry reconstruction to equity share capital 6 lakhs at that point of time. So that's why there is no change in the entry. That there is only one entry, that is reconstruction account debtor to discharged amount. Do you agree, guys? All of you. Sir, just now you told discussion with unrecorded liability. Then what about unrecorded asset? Most of the times unrecorded asset concept was not asking. Just anyway, unrecorded liability concept just now I told. That is the reason why unrecorded asset concept also I am telling. Sir, for example, unrecorded asset is also there for 5 lakhs. Now, this 5 lakhs you are selling, let us assume in the outside market. You are selling in the outside market. You got 6 lakhs. Then what is the entry, sir? First record it. First record. Asset account debtor, that is unrecorded asset account debtor 5 lakhs to reconstruction account 5 lakhs, which is the first and foremost entry, right? Now, such unrecorded asset you are selling in the outside market. Entry, bank account debtor, at how much value you are selling? 6 lakhs, sir. 6 lakhs to unrecorded asset account 5 lakhs. Remaining was profit. The profit or loss during the process of internal reconstruction, we may transfer to reconstruction account, which is 1 lakh. Now, unrecorded asset 5 lakh debit, unrecorded asset 5 lakh credit, cancel with each other. Tell me, guys. And a reconstruction account, this is reconstruction account. Out of this 5 lakhs, 1 lakh is credit. Now, out of this 1 lakh also cancel, this 1 lakh also cancel. Now, bank account debtor, just a moment. Unrecorded asset to reconstruction. Yeah. May I know how much will be the amount? Bank account debtor 6 lakhs to just a moment, guys. Once again, I'm repeating. The connection was missed out for me. The flow actually missed. So unrecorded asset was 5 lakhs, which is right now sold in the outside market at 6 lakhs. So first we are going to record it, right? That is unrecorded asset at the rate of 5 lakhs to reconstruction account is the journal entry. That's fine. Absolutely fine. Now we are selling such unrecorded asset at 6 lakhs. That is bank account at 6 lakhs to unrecorded asset 5 lakh and to reconstruction account. The profit is for 1 lakh. Now the entry was, there is no cancellation of reconstruction. There is only cancellation of unrecorded asset and asset. Now the entry is bank account debtor 6 lakhs. Here reconstruction credit 5 lakhs. Here reconstruction credit 1 lakh. Total 5 lakhs plus 1 lakh, 6 lakhs. So the entry is reconstruction 6 lakhs. Again proved here, what I told at the time of discharging liability, entry reconstruction to cash, or reconstruction to equity share capital, reconstruction to preference share capital, reconstruction to debentures at the rate of discharging amount. Here, the entry also same, that is cash to reconstruction, reverse entry. This is liability, that's why reconstruction to cash. This is realization entry, that's why bank to realization at the rate of realization value. For example, we are realizing from 5 lakhs worth of asset that we are realizing only for 2 lakhs. Then the entry bank to reconstruction, only 2 lakhs. Sir, for example, we are realizing 8 lakhs. Bank to reconstruction, 8 lakhs. No need to record it, no need to sell it. Sir, what is the conclusion from the concept of unrecorded liability or asset? If it is unrecorded liability, entry was reconstruction to discharged amount, that is cash or equity share capital at the rate of dischargeable amount. If it is asset, the entry was reversed, cash or equity share capital or preference share capital, something what we receive, sorry, equity shares of the other company or preference shares of the other company, what we receive to reconstruction amount at the rate of realizable value. That point I want to emphasize here. Is it okay, guys? All of you with me? This concept is also important, guys. Okay. Sir, before summarizing the things, I will explain some important aspects. Please, all of you concentrate here. Before summarizing the things with my notes, I'm going to explain some important points. What are such important points, sir? Sir, after completion of entire internal reconstruction process, you need to check how much balance in there under reconstruction account. The balance in reconstruction account, first you need to find out how much balance is available. In general, it have credit balance, because the process of internal reconstruction, we are going to occur for that purpose only. So reconstruction account, in generally, how much credit balance we have, first we need to check. After that, whether it was mentioned in the problem or not, we need to knock off the P&L debit balance with this balance of reconstruction account, whether it was mentioned or not. Why, sir? The objective of internal reconstruction process itself is to eliminate the huge losses which are existing in the company, to show the existing financials a true and fair picture, or at least to go for a liquidation, or before going for the liquidation, just we are trying to convert the existing organization into as a going concern for furthermore. So that's why the P&L debit balance, we should need to knock off whether it was mentioned in the problem or not. Irrespective, mentioned in the problem or not, we need to cancel the P&L debit balance with the reconstruction account. Sir, what about unrepresented assets, sir? What about unrepresented assets? Maybe intangible assets or maybe any other asset, whatever the case may be. If it is specifically mentioned, then only you need to knock off. For example, goodwill is there, sir, which is unrepresented, it is clearly given. Then don't straight away to cancel. If it was clearly mentioned that, sorry, goodwill is there, something mentioned, don't cancel directly. If it was clearly given that which is an unrepresented goodwill, or you need to cancel if something is given like that, that is clearly mentioned in the problem. Any intangible asset or any other asset, if it is specifically mentioned that which is unrepresented, now we are going to cancel with the reconstruction. Then only you can cancel with the reconstruction. Sir, after cancellation with the reconstruction, if any balance is there, after cancellation, if any balance is there, then what I should need to do? The balance in reconstruction account, we should need to make it transfer to capital reserve. I'll give different cases for better understanding. All of you please concentrate. Sir, the balance in reconstruction is, first initially, before knocking off, balance in reconstruction is 5 lakhs. P&L account debit balance was 3 lakhs. And one intangible asset called patents is there, which is for 1.5 lakh, which are completely unrepresented and clearly mentioned in the problem that you need to knock off with the reconstruction. Then what is the entry? Reconstruction account data 5 lakhs. Now the balance in reconstruction account, you should need to cancel with P&L. P&L account is having debit balance. Now you should need to cancel. That's why you should make it as credit aspect. 3 lakhs. patents are assets. That's why having debit balance, we need to cancel. That's why making credit 1.5 lakh. The remaining 50,000 is the profit. The profit you need to make it transfer to capital reserve account, which was 50,000. Do you understand? That's why any balance under reconstruction account you can transfer to capital reserve. Sir, another case let me take. I know, I understand your doubt. What is your doubt? Sir, if reconstruction account is not enough to knock off the P&L account itself, then what I can do, sir? Let us assume balance in reconstruction is 5 lakhs. Now the P&L account balance itself is, let us assume 6 lakhs. Then what can I do, sir? Now, entire reconstruction account should be debited and a profit and loss account. Out of this 6 lakhs, I can able to knock off 5 lakhs only. If any other reserves are available in the organization, like general reserve or any other reserve, if which is available, you can use such other reserves. If at all available, you can use such other reserves. Then you can knock off 6 lakhs. No, sir, there is no other reserve is available, sir. Then what I can do, sir? If there is no other reserve is available, then you can knock off P&L account up to 5 lakhs only. The remaining 1 lakh of P&L is still shown under balance sheet. So that's why my conclusion is, after completion of internal reconstruction process, first you should need to find out the balance under reconstruction account. Whether in the problem it was mentioned or not, the P&L account debit balance we should need to knock off with the reconstruction account. If the reconstruction account balance is much more than the P&L account debit balance, then the difference of amount you can make it transfer to the capital reserve. If the balance under reconstruction account is not enough to cancel with the debit balance in the P&L, you can use the other reserves. If the other reserves are not available to the extent of balance with reconstruction only, we can make a cancel with P&L account debit balance. Now coming to other unrepresented assets like goodwill, patents and any other asset, if it is specifically mentioned, then only we should need to knock off with the reconstruction. Otherwise you can simply ignore. That's it, guys. So these are the important aspects or issues I need to discuss. And one more thing I told you, at the time of preparation of balance sheet, we need to add and reduced word if court or if the NCLT order to add these words. And one more thing, guys, after completion of internal reconstruction, at the time of presentation of balance sheet related to tangible assets, we should need to clearly represent under notes to accounts for 5 years with the reduced values, and there is a proper internal reconstruction system was occurred, due to which the reduced tangible assets were occurred. Like that you need to mention. What I want to discuss here, maybe certain tangible assets may be impacted during the process of internal reconstruction because revaluation of assets and liabilities is going to occur. For example, a building is there which was there at 5 crore. Now we are going for the downward revaluation. Now the building value become it as a 4 crores. Now the revaluation loss of 1 crore occur, right? Such revaluation loss or such particular tangible asset, you can clearly provide as a additional information. Sir, during the process of internal reconstruction, what are different PPE going to be impacted and how much it was impacted? Such information you should need to present for at least for 5 years. This is also one of the provision as per the Companies Act 2013. Sir, hope I discussed conceptually each and every part except surrender of shares, guys. Except surrender of shares. Now let me cross check the entire content with my material. All of you please come to my notes. My material means just I want to explain directly through notes. The same content will be there in my material as well. Okay. First let me put my material. That is better. I think so. Now, can you please tell me, guys, all of you, what happening in case of internal reconstruction? It is a process by which affairs of the company are reorganized by the revaluation of assets, reassessment of liabilities, and by writing off the losses already suffered. That is to write off P&L account debit balance by reducing the paid up value of the shares and are varying the rights attached to different classes of shares. All such issues we seen under the procedure of internal reconstruction are various types of internal reconstruction. The object of reconstruction is usually to reorganize capital or to compound with creditors so that company can be bailed out from the present situation without winding up the existing company. In case of internal reconstruction, the existing company doesn't liquidate it at all. The existing company will continue their business activities. But in case of external reconstruction, the existing company going to liquidate, or a new company is incorporated to take over the existing company. What are the different methods of internal reconstruction? Alteration of share capital, variation of shareholders' rights, reduction of share capital, compromise or arrangement, surrender of shares. Alteration of share capital. Sir, which section deals? Section 61. Alteration of share capital, discuss. Sir, as per section 61, increase of authorized share capital is coming under alteration of share capital. Either consolidation or subdivision is also coming under alteration of share capital. Conversion of shares into stock is also coming under the alteration of share capital. Am I right? But before doing that, articles of association provision should be there, and ordinary resolution also should need to pass in the general meeting before going for alteration of share capital. All such issues I clearly discussed. Variation of shareholders' rights. Section 48. Section 48 of the Companies Act 2013 will be discussed about the variation of shareholders' rights. Maybe cumulative preference shares to non-cumulative preference shares. Am I right, guys? Then old percentage cumulative preference shares to new percentage cumulative preference shares. For example, earlier those are 7% cumulative preference shares. Now they are going to convert into 8% cumulative preference shares. Now 7% cumulative preference shares you need to cancel, and 8% cumulative preference shares you need to credit. Sir, shareholders' right vary means the right may be with respect to dividend or with respect to voting rights. Anything may be possible. The two issues I discussed. Then reduction of share capital. Section 66 of the Companies Act 2013 discussed things related to the reduction of share capital. Here special resolution should be mandatory, and confirmation of the tribunal on application made by the company is also pre-requirement. Sir, reduction of share capital is happened in three ways. I told you, through the cancellation of unpaid amount on the shares held by them. Unpaid amount or uncalled capital. I clearly explained, if you remember. Sir, if uncalled capital was occurred, just a second. If uncalled capital is there, how the journal entries will look like, we'll see, that is cancellation of uncalled capital. The remaining portion of the 3 rupees paid up value we are going to cancel, which is also known as conversion of partly paid up into fully paid up equity shares. The old face value you need to debit, new face value you should need to credit. There is no difference in paid up value. Next, paying off any paid up share capital which is in excess of its requirements. Just we are paying the paid up value, the fully paid up shares, we are paying to the extent of 3 rupees per share. So that's why the existing face value should be debited. You should need to make credit to equity shareholders. Remaining face value, make it credit. You can make payment to the equity shareholders. And the next case is cancellation by paid up share capital which is lost or unrepresented by available assets, which is also known as sacrifice made by shareholders. Sir, how the sacrifice may happen? Reduction in paid up value but not the face value. Reduction in paid up value but not the face value. Am I right? The face value is same. At that point of time, no need to cancel the old capital. Only to the extent of reduction purpose only you can pass the journal entry, that is equity share capital account adapted to reconstruction account. And the second case is reduction both in face value as well as paid up value. Then at that point of time, the old face value you need to cancel. Am I right? And I also told you clearly, if unless otherwise specifically mentioned, if something is sacrificed by the shareholders means always we can assume that there is a reduction in paid up value as well as face value in the problems. This is all about reduction of share capital. Next, compromise or arrangement also we seen. A scheme of compromise and arrangement is an agreement between the company and its members or the outside liabilities when the company faces financial problems. Such an arrangement therefore also involves sacrifices by the shareholders or the creditors or the debenture holders by all of them. Surrender of shares we will see at later point of time. Important points. What are the important points we've seen here, guys? In case of internal reconstruction process, alteration of share capital and variation of shareholders' rights, there is no involvement of capital reduction account or reconstruction account. In these two methods, capital reduction account, reconstruction account doesn't come into the picture. But in case of reduction of share capital or compromise and arrangement or surrender of shares, reconstruction account or capital reduction account coming into the picture. The same point he is telling. under the above mentioned methods, alteration of share capital and variation of the shareholders' rights do not involve capital reduction or reconstruction account. It is only under the reduction of share capital and a compromise and arrangements or surrender of shares concept, only reconstruction account or capital reduction account coming into the picture. Next, he is telling about revaluation of assets. Okay. Next, he is also telling about eliminate the debit balance in profit and loss account, all overvaluation of assets by creating the accounts concerned and debiting the capital reduction account. This one also I told you, whether they mentioned or not P&L account debit balance, we should need to eliminate. Sir, after making all such things, if there is any balance in reconstruction account, it is finally transferred to the capital reserve under reserves and surplus. Next, after at the time of preparation of balance sheet, we should need to add and reduced word. In case of fixed asset, the amount written off under the scheme of reconstruction must be shown for 5 years. That point also I mentioned. That's it, guys. With this 100% concept is over. Fine. Today, if you observe from the inception onwards, we are telling theory. I know you also evaporated like anything. This is the time to take one problem for understanding the entire concept, what we learned till now. Is it okay, guys? All of you with me? This is your time, problems time. Please, all of you come to problem number 3. Please put your thumbnails, all of you, thumbs ups quickly, then I can proceed with problem number 3. Is it concept clear? All of you. Yeah. Fine, guys. Please, all of you come to problem number 3. The reason is, which is a comprehensive problem. That's why first I want to take that problem. And one more thing, before proceeding with problems, just I want to emphasize you one thing. The internal reconstruction chapter is pretty much simple while compared with the amalgamation. But sometimes what will happen if you are having certain problems with understanding of the problem, not with understanding of the concept, understanding with the adjustments given in the problem, you may go into the different direction. To get good success or to get success in internal reconstruction problem, understanding of the problem is also pretty much important. Okay, so please remember that point also in your mind before proceeding with the problem. The balance sheet of A and Company Limited as on 31st December 2011 is as follows. Fixed assets, freehold property was given, plant, patent, goodwill, trade investments. And under current assets, trade receivables given, inventory, profit and loss account was given. And under liabilities, share capital, cumulative preference shares are given, equity share capital was given, debentures was also there, accrued interest is also given. And under current liabilities, bank OD is there, trade payable, director's loan. Come down. The court approved a scheme of reorganization. Always after approval by the court. Here court means NCLT, National Company Law Tribunal. Then only the company can proceed for internal reconstruction. You know that concept was already explained by me. To take effect on 1/1/2012, whereby the preference shares to be written down to 75 each. Written down means there is a reduction in capital, and equity shares also to 2 rupees each. If you observe, the existing preference share was 100 rupees face value and the existing equity share was 10 rupees face value. 100 rupees was reduced to 75 each. 10 rupees was reduced to 2 rupees each. If nothing was mentioned means the remaining 25 here sacrificed. Here the remaining 8 rupees was sacrificed by the equity shareholder. And whenever there is a sacrifice made by the shareholders, unless otherwise specifically mentioned, we can presume that there is a reduction in both in paid up value as well as face value. That means the new face value for preference shares are 75 and the new face value for equity shares for 2 rupees. That point you should need to remember. Okay. Can you please tell me, all of you, what are the journal entries, guys? What are the journal entries for written down sacrifice made by the preference shareholders? 6% cumulative preference share capital account at R in bracket 100. You need to represent entire 4 lakhs. 2. 6% cumulative preference share capital. 4,000 multiplied with 75, which is 3 lakhs. 3 lakhs. To reconstruction account. How much? 1 lakh. Let me put into my OneNote as well. While reading the problem itself, let me put one by one sentence. Just a second. Or before putting all such things, what they required, let me check the requirement finally. You are requested to show the journal entries reflecting the above transactions, including the cash transactions, and prepare the balance sheet of the company after completion of the scheme. Like that only, they're asking only one type of problems are possible in case of internal reconstruction, that is showing the journal entries and preparation of the balance sheet after completion of internal reconstruction. Now, first, let me start putting the entry one by one while reading point by point. Problem number 3, this is so 2 sub questions are there. One is journal entries, another one is balance sheet. Under that point number 1, equity shares are reduced to 75 rupees each. Am I right? The entire existing equity share capital you can cancel because entire existing face value we are cancelling. That is equity share capital account at R. Equity share capital account at R. How much face value, guys? Earlier 10 rupees. So the total amount was how much? 7,50,000. To equity share capital account, new face value how much? Reduced to 2 rupees each. So 75,000 into 2 rupees, 1,50,000. To the extent of sacrifice made by the equity shareholders transferred to a reconstruction account, which was 6 lakhs. Coming to preference shareholders, in the same way, first you need to cancel the existing 6% cumulative preference share capital. May I know the face value? 100. So 4,000 into 100, which was 4 lakhs. To 6% cumulative preference share capital. So reduce it to 75. 4,000 into 75, 3 lakhs. To reconstruction account, 1 lakh. Is it okay, guys? Next. Fine. Let me read the second point. Before checking with second point, some of our friends put some queries. Yes, sir, understood. Clear. Fine. Sir, difference between the worth and amount of shares. It is easy, Amma. Worth of shares means we are expressed in terms of amount. Number of shares means we are expressed in terms of number. That's it. Worth of shares means amount. How much amount of shares? Okay. I'm asking, sir, whether we can proceed or not. Put your thumbnail. Some of our students put Happy Teachers Day, sir. Thank you so much. Okay, they are in chill mode actually. Just to grab your attention, just I'm adding some funny things here. At our childhood, if you really remember, whenever September 5th comes, then so many events are there at the schooling. Okay, certain homely atmosphere, and some of our friends will acting like as teachers. So something will be there, right? Actually, once when I wake up today, just I remembered my entire childhood, that how our entire schooling was happened at that point of time, as on September 5th, on the eve of Dr. Sarvepalli Radhakrishna's birthday. Okay, yeah, I too agree. But right now, the entire time and the society itself and largely changed. A lot of digitization happened. Not only in our sector, for children also, a lot of digital classes are happening. We don't know how the direction and all such stuff is going, but it's good sign for one side. and it is bad sign for another side. We need to fulfill the gaps in both the ways. Okay, fine. Let it be. Leave such all things. Come with point number 2. Because if I start something, then I'll go that side. Okay, come back. Of the preference share dividends which are in arrears for 4 years. Oh my God. Sir, why I told the concept of unrecorded liability, here? Unrecorded liability. Most of the times in questions, what they will represent the unrecorded liability as arrears of cumulative preference dividend. Sir, in case of cumulative preference shares, what will happen? The nature of the preference shares itself is, if the company is not having sufficient profits in any particular year, then the dividend related to that particular year may be cumulative to the next year. Then the company in a particular year, if it attained the profits, the company should need to pay the previous dividends which are payable as well as current year dividend. That's why which is known as cumulative preference dividend. If any of type of such arrears are available, then such arrears of cumulative preference dividend we need to discharge during the process of internal reconstruction. Sir, why then is it was not represented as a liability? No, not required. It was not a liability. What is the definition of liability? Liability is a present obligation actually. Present obligation means, is it obligated to pay? If the company attained profits, then it need to pay. Sir, if the company is not having profits, no need to pay. Then how you can tell it is a liability? But during the process of internal reconstruction, you can convert the unrecorded liability as a liability. Now you need to pay. That's why most of the times, whenever there is a discussion with respect to arrears of cumulative preference dividend, then your mind automatically the concept of unrecorded liability coming into the picture. Now, of the preference share dividends which are in arrears for 4 years, can you please tell me, all of you, 1 year preference shares dividend how much? 6% into 4 lakhs. 6% into 4 lakhs, which is 24,000 per annum is the dividend. Okay. For 4 years means 4 into 24,000. Of the preference shares dividend which are in arrears for 4 years, 3/4 to be waived. And for the 1/4, equity shares of 2 rupees each to be allotted for the remaining quarter. Sir, what he is talking all about, sir? Please come down. He's talking about arrears of preference dividend. So before passing the entry, just I'm explaining the concept. Arrears of cumulative preference dividend. So total 4 years, guys, which is 4 multiplied with 24,000. So out of which it is clearly given that 3/4 to be waive off. Waive off means sacrifice. 3/4 is waived off. Sacrifice. And the what about remaining 1/4, sir? Remaining 1/4 we are paying in the form of equity shares. Can you please tell me, all of you, for an unrecorded liability, if the entire amount is sacrificed, or if something is sacrificed, no entry. If something is sacrificed, no entry. That means for the waive off, no need to pass any entry. Do you know the reason? If you want to record, first record it. Reconstruction to arrears of cumulative preference dividend. Then arrears of cumulative preference dividend to reconstruction. Okay, that's why there is no impact. Waive off, no entry. For 1/4 of the equity, 1/4 amount means 24,000. We are issuing in the form of equity shares. Whenever you are discharging unrecorded liability entries, reconstruction account at R with the discharged amount to in the form of equity shares here. That's why to equity share capital account, which is 24,000. This is the entry we need to pass as 4th entry for point number 2. Do you agree with me, guys? All of you? Fine. Next, come to point number 3. Accrued interest on debentures to be paid in cash. Accrued interest on debentures. Where it is there? Here accrued interest is there, which was 22,500. We are paying in the form of cash means liability to cash. Entry. accrued interest account debtor to cash account. How much? 24,000. 24 or 22,500. Sorry. So 22,500. It was given now 22,500. Next. What is the next point? Point number 4. Debenture holders agreed to take over freehold property. Book value 1 lakh at a valuation of rupees 1,20,000 in part repayment of their holdings and to provide additional cash of 1,30,000 secured by a floating charge on company's assets at a interest rate of 8% per annum. That is the reason why I told you understanding the adjustments given in the problem is one more step or one more important step to crack the internal reconstruction problems. If you observe 1, 2, 3 are pretty much easy, but point number 4, just to deceive the students, just they are given in zigzag manner. What is the zigzag manner? First, debenture holders agreed to take over the freehold property. First, he is talking something about the freehold property, right? Don't think in the angle of debenture holders. First, we can think in the angle of freehold property. Sir, in the books, if you observe the freehold property, how much it is available? 4,25,000. So the total freehold property availability is at 4,25,000, right? Now first put that freehold property 4,25,000. Fine. Now out of this 4,25,000, book value of 1 lakh. He's talking about book value of 1 lakh. What happens to the book value of 1 lakh? Yeah, concentrate. For the book value of 1 lakh, this is the book value of 4,25,000. Out of this, he is talking about 1 lakh book value. The book value of 1 lakh at a valuation of 1,20,000, we are issuing to debenture holders. That means first this book value was revalued. This 1 lakh was revalued into 1,20,000. Then only we can able to provide to the debenture holders. That means 1 lakh, if you can go for revaluation, which was upward revaluation of 20,000, then it will become 1,20,000. Can you please tell me, all of you, for a freehold property, for an asset which is upward revalued, the entry is freehold property account debtor to reconstruction account. How much, guys? Upward revaluation 20,000. This is the first and foremost entry you need to pass. Then what happened? That freehold property after 1,20,000 in part repayment of their holdings, we are giving to the debenture holders. That means this 1,20,000 is ultimately given to whom? Debenture holders. We are giving to debenture holders. Just hold for it. Don't think about debenture holders point of view. We will think at later point of time. Now we are only thinking in freehold property point of view. That means out of 4,25,000, discussion was over to the extent of 1 lakh. What about for the remaining 3,25,000, sir? What about for remaining 3,25,000? If you come down, somewhere something will be given for the freehold property for remaining 3,25,000. Please check patents and goodwill. This not there. Inventory not there. Here. In point number 8. Come to point number 8. Remaining freehold property to be revalued at 3,87,500. If nothing was given, what we can assume? Remaining freehold property will be there at book value only. But here it was clearly given remaining freehold property to be revalued at 3,87,500. Now this 3,25,000, if you revalue at 3,87,500, then may I know the upward revaluation profit? How much, guys? Profit was 62,500 here. So you can also pass one more entry, freehold property to reconstruction 62,500. Or rather than pass two different entries, the entry was same, you can club both the amounts as well. That is 20 plus 62,500, 82,500. You can write directly here itself, which was 82,500, which is also 82,500, which is impact of upward revaluation of both the assets, which is the impact of upward revaluation of both the assets. In a single entry, you can express that. Is it okay, guys? Which is the impact of both the entries combinedly? Freehold property to reconstruction, which is an upward revaluation. Do we agree, all of you? In bracket, if you want, you can mention 20,000 plus 62,500. Next. Come up. Now still point number 4 is not yet over. Till now, I only thought from freehold property angle. Now my thought process began from debenture holders point of view. Now this 1,20,000 we are providing to whom? Debenture holders, right? Further, you can pass the entry. Here, debenture holders, how much worth is there? Actually, 6% debentures, 3,75,000 worth is there. Am I right? Now he is only talking about 1,20,000 amount only we are paying. Am I right? Then 6% is debentures account debtor. That is, he's only talking about 1,20,000. I am also paying 1,20,000 only. Or first, let me put the conceptual clarity. Then I'll put the entry. That is also better thing. First, let me put 6% as debentures. So total 6% debentures, how much? 3,75,000. Out of this 3,75,000, first we are paying 1,20,000 in the form of freehold property. This is there now. 1,20,000 we are giving to this one. What is the balance, may know? Balance amount how much? 3,75,000 minus 1,20,000. The balance was 2,55,000. Still the sentence was not completed. Let me read. Debenture holders agreed to take over the freehold property, book value of 1 lakh at a valuation of 1,20,000 in part to repayment of their holdings and to provide additional cash of 1,30,000 secured by a floating charge on company assets at an interest rate of 8% per annum. Sir, that means for the remaining amount, for the debenture holders, for the remaining amount, we are paying in the form of cash? No, that is not the point he is telling. That is the reason why I told you we should need to appreciate clearly. To provide additional cash, for company itself, debenture holders are ready to provide additional cash. Indirectly, he is conveying that debenture holders are subscribing for other debentures. They are subscribing 8% debentures to provide additional cash to the company for 1,30,000. This is altogether no relation with the balance amount. This is altogether they are subscribing the additional debentures for 1,30,000. For that entry was cash account debtor. Not here. I'll write down here. Cash account debtor to 8% debentures. This is a further subscription of debentures. It was clearly given to provide additional cash of 1,30,000. They are subscribing the further debentures. Now, what about this balance amounts are? That balance amount is going to be continued to show in the balance sheet after internal reconstruction. Now, for this, what is the journal entry? 6% debentures account debtor to freehold property account. Actually, first you need to transfer to debenture holders. 6% debentures account debtor to debenture holders, then debenture holders to freehold property. I made the direct entry, which was 1,20,000. Now, what is the impact of point number 4 and point number 8 combinedly? Total 3 entries will coming into the picture. One is upward revaluation of freehold property. Freehold property to reconstruction. 20,000 for 1 lakh face value of the asset. For the remaining 3,25,000 face value, 62,500, which is the total upward revaluation entry from freehold property point of view. In 6% debenture holders point of view, out of 3,75,000 in part payment, we are settling through issue of freehold property. That's why 6% debentures to freehold property. What about the remaining balance? Remaining balance will be shown in balance sheet as a liability. Apart from this, to provide the additional cash to the company, debenture holders are ready to subscribe to the extent of 1,30,000 debenture, 8% debentures. That's why I put cash account data to 8% debentures account is the another entry, which is fourth entry. After that, which is fifth entry. This is sixth entry, and this is seventh entry. Here I'm explaining the concept and putting the entries. So that's why in the zigzag manner, but in the examination, you can simply put the entries. No need to explain the concept there. Okay. Smita Singh again asked that, sir, explain, can you debenture cash point once again? Here nothing is there, ma. Just read the sentence carefully. Up to here sentence was over. He's combining another sentence. And if you observe here, he used the word and to provide additional cash of 1,30,000. To provide additional cash of 1,30,000 means to whom they are providing additional cash? For the company. For the company to provide additional cash of 1,30,000 secured by a floating charge on company's assets at an interest rate of 8% per annum. Debenture holders agreed to provide additional cash of 1,30,000 secured by a floating charge on company's assets at an interest rate of 8% per annum. Indirectly, they are conveying that debenture holders will provide the additional cash, provided that the company should provide a security on floating charge, which are secured debentures, and the interest rate is also not like as earlier 6%. Right now, the interest rate was 8%, which is nothing but further subscription of debenture holders or further debentures capital subscribed by the debenture holders. That's why the entry was cash account data to 8% debentures account, which was 1,30,000. Is it okay to all of you guys? Next. Sir, let us finish this problem in this session itself. Please, all of you concentrate. Patents and goodwill to be written off. Sir, last we will consider, because in the single entry, we will put reconstruction to patents, reconstruction to goodwill. Here it was clearly given that something we need to write off with the reconstruction. Inventory also to be write off by 65,000. This also we will write off at the last instance. Amount of 68,500 to be provided for bad debts, which is also one type of write off only. So we will also take into consideration at the last instance all these 3 points. Point number 8 was already over. Trade investments were sold for 1,40,000. In book, trade investment was how much? Face value? 55,000. 55,000 worth of book value of trade investment we sold for 1,45,000, which is a profitable situation. You can put the entry here. Bank account debtor 1,40,000 to trade investments account. To trade investment account, how much? 55,000 is the book value. Remaining profit is how much, guys? Transfer to reconstruction account. 1,40,000 minus 55, how much? Which was 85,000 is the profit. Am I right, guys? Are you with me, all of you? Next. Directors to accept settlement of their loans as to 90% thereof by allotment of equity shares of 2 rupees each, and to 5% in cash, and the balance of 5% is being waived. These 3 points I not yet considered. 5, 6, 7 we will consider at later point of time. Now I'm discussing point number 10. Go up. Director's loan is how much first? 1 lakh. First consider this director's loan. He's talking something about director's loan. So director's loan, how much? 1 lakh. Out of this 1 lakh, they are talking about 90% we are settling through equity shares. So 90% means 90,000 settling in the form of equity shares. 5% in the form of cash. 5% means 5,000 in the form of cash. Remaining 5% is sacrifice, means waive off. Transfer to reconstruction. What is the entry, guys? Can you please tell me, all of you? Entire director's loan we need to cancel. That was 1 lakh. To equity share capital, transfer 90,000. To cash, 5,000. To reconstruction account, 5,000. This is the entry. Am I right, all of you? Which is very much simple. Entire director's loan cancel. Issued equity share capital 90,000. Issued cash 5,000. Remaining 5,000 way of reconstruction. Next, come to problem number 11, all of you. There were capital commitments totaling 2,50,000. These contracts are to be cancelled on payments of 5% of the contract price as penalty. Someone, Hiral is asking, sir, narration of these entries is also very much important, huh, sir? Absolutely. But don't hesitate to put narration, guys. Sir, what will be the narration? Can you please tell me, sir? Sir, narration is not a prefix, guys. And what the narration, you put the same terms. Can I need to use, sir? No. Narration itself means expression of the entry or to provide the meaning to the entry. If a layman, if he will see the entry, he unable to understand, that's why he will read the narration. Whatever the thing given in the problem, the same thing you can put in the narration. For example, this is the director's payment entry, right? Being final settlement to the directors, out of which 90% is through issue of equity shares and the remaining 5% is through cash, and the remaining was sacrificed by the directors. That's it. In the same way, you can express, or someone they might express that being to the extent of 5% is transferred to the reconstruction and the remaining through payment of equity shares and cash. Like that, someone is going to put. That may differ from person to person. That's why don't give any efforts to put the narration, guys. Just to make it present the question, the particular point given in the question as a narration in the understandable manner. That's why if you observe, whether in the chapter amalgamation or internal reconstruction, I didn't touch any single part about the narration. Okay, fine. Next, guys. I think so. I'm running out of the time. Actually, still, I required in and around 5 to 10 minutes to complete the problem. I don't want to take it the problem in hurry manner. So just we completed up to problem number 10, out of which 5, 6, 7 were pending, and 2 more problems are there. Hope you understand till now what I have discussed in this problem. I'll continue the same problem in the tomorrow session. I'll summarize, then I'll continue with the flow. Almost it will take some more 5 to 10 minutes to explain the things, because first time we are having this type of problem. We can granted we can spend that much of time on this problem as well. Okay, once again, happy Teachers Day to one and all, guys. For all your gurus, you can dedicate it this Teachers Day. Enjoy. Bye bye. We can meet with the next session.